Hello and welcome to the weekly Forex Review here at xm.com. I'm Andreas, your currency analyst, and I'm here with my colleague Rafi Boyajan. So Rafi, a few minutes ago we had the release of the NonFarm Payrolls report out of the US. On the positive side, earnings were on the rise. Specifically, average hourly earnings grew by 0.5% month on month in September. Expectations were for a rise by 0.3%. While in August, they gained 0.2%. Year on year, they grew by 2.9%. And allow me to remind our viewers that Janet Yellen said that between 3 and 4% year-on-year rise is a healthy figure, and we're close to being there. Again, continuing with positive aspects of the report, the unemployment rate fell to 4.2% from 4.4%. This is a 16-year low, and the participation rate moved higher to 63.1% from 62.9%, while last month's positions that were added to the economy were revised upwards to 169,000 from 156,000. Now, on the negative side, the economy didn't really add any positions this month. On the contrary, 33,000 positions were taken out of the economy. Expectations were for an addition of 90,000 positions. This is the first time the U.S. economy, there's a reduction in positions in the U.S. economy since 2010. But despite this negative aspect of the report, we saw the dollar rising, and this is what analysts were saying ahead of time, that we already knew that the hurricanes would negatively affect the number of positions, and we expected that earnings would dominate attention, if I can use that word. And as I said, we saw the dollar rising. A few minutes after the report, it was up by, the dollar index, I should say, was up by 1.2% on the week, and it is on track for its fourth straight weekly gain. But even before the report, the greenback was experiencing a strong week. Why so, Ravi?
Right. So prior to the jobs report, we had several factors pushing up the dollar. We had a series of strong data for much of the week, which surprised to the upside. We also had the Congress approving a spending blueprint, which kind of paves the way for the tax reforms to be passed at a later stage. So that was the first official sign of progress as far as Congress is concerned with regards to Trump's tax reform plans. And of course, we had a number of Fed speakers, all of them pretty much sounding hawkish, pretty much signaling that the rate hike for December is on the cards. And this even before the jobs report, which, although, like you said, we had that negative miss in the payrolls numbers. Nevertheless, we saw wage pressures building up, rising at the fastest pace in 7 years. So all of that has been very positive for the dollar, and we saw the dollar yen hitting a 3-month high of above the 113 level.
Mm-hmm. And positive data as well as rising hopes of tax reforms have been also helping US equities this week. They've been hitting high after high, but things in the UK are not as rosy. Political uncertainty is clouding the outlook. I know you've been taking a closer look at developments. I want to hear what you have to say on that.
Well, it hasn't been a very good week for the pound. We had Theresa May's keynote speech on Wednesday in front of the Conservative Party members. So this week we had the Conservative Party conference. It was meant to be a very important speech for Theresa May, because this was an opportunity for her to assert her authority over the party, given all the speculation about possibly Boris Johnson making a leadership bid. But unfortunately, her speech didn't go quite as planned. It was marked by a series of mishaps. And the British media described it as a disastrous speech, and that it fueled speculation about her future. We've had reports that a former Conservative Party chairman, Grant Shapps, has gathered the support of 30 MPs in order to ask Theresa May to step down. According to Conservative Party rules, you need the support of 48 MPs to force a vote of no confidence vote. So Theresa May doesn't look too safe at the moment, but at the same time, we are seeing what's been in place already, the fact that senior Conservatives do not want to be faced with a leadership contest at this point. when the Brexit negotiations aren't going too well. And also the question is, even if Theresa May was to step down, who would replace her? All of that might just keep her in place. But in the meantime, all of this has been very negative on the pound. It's hit a 1 month low against the dollar, dropping below the 1.31 level. And it wasn't that long ago, actually, it was above the 1.36 level. So that's a pretty steep decline in sterling.
And Theresa May did make some comments not long ago. Those provided a boost to sterling, but it was rather a short-lived boost. And moving to the Eurozone, we've been having ongoing tensions in Catalonia that have been leading to Euro weakness. I would say that after Macron's victory, everybody was looking forward to a brighter future in the Eurozone, but we've had recently elections in Germany, far-right party significantly gaining. Now Catalonia is pushing for independence, and as I said, this is leading to the euro weakening relative to the dollar. But with that, Rafi, let's move on to next week. Is it going to be a quiet week?
Next week is looking fairly quiet. The main data will be out of the US. We've got US inflation, retail sales, the US Domestic Preliminary Consumer Confidence Index. We're also going to have the FOMC minutes for the September meeting, but it's going to be much more muted elsewhere. We're going to have industrial output numbers from the Eurozone, the UK, and trade numbers as well out of China, the UK, and Germany.
Thank you very much for your analysis, Rafi. Thank you everyone for watching and have a great day.